ultimately all manipulations end poorly, and I think this one will be no different as far as I'm concerned. So stay the course. The physical demand is overwhelming. The ability of these banks to easily suppress the price to the point where they have to have the second largest concentrated short position by the commercial banks in the history of the exchange for the July delivery. That tells you that we're getting, I think, to an environment where being naked short like this is really probably not worth the setup probably isn't worth the return when you talk about potential fallout. When I think of silver, I think of the word asymmetrical, lowest downside, highest upside. But with all of this said, the only people that are taking advantage of that are the most sophisticated, well-informed traders in the world.
Andy Schectman, CEO of Miles Franklin Precious Metals, has issued a serious warning that the gold and silver markets are reaching a critical inflection point, one where underlying physical demand is beginning to overwhelm the long-standing system of paper price control. He asserts that the recent price pullback in both metals, particularly the sharp $100 drop in gold and over $1 in silver since June 12th, is not a reflection of organic market sentiment, but rather a coordinated suppression effort by bullion banks. These institutions are acting out of urgency to defend massive short positions ahead of COMEX option expirations and the July delivery cycle. The scale of these short positions in silver is among the largest in the exchange's history, indicating that the financial system is balancing on a razor's edge. If the market were allowed to rise unchecked, the resulting margin calls and losses for these banks could trigger systemic consequences. What's more alarming, according to Schectman, is the growing disconnection between paper pricing and physical metal availability. He highlights mounting delays in bullion delivery, particularly in London, where what should be a 3-day turnaround has extended to as much as 8 weeks, an indication that physical supply is being rapidly drained. At the same time, sovereign entities such as China are capitalizing on the West's artificial pricing by quietly accumulating metal through strategic delivery demands. This surge in physical movement, paired with consistent spot premiums over futures prices, suggests that the foundations of the synthetic price system are starting to erode. Looking to the near future, Schectman warns that this imbalance cannot last forever. Gold appears to be breaking away from Western price control, increasingly following signals from Eastern markets and central banks that are accumulating the metal for long-term reserve security. Silver, while still heavily manipulated on the paper side, is experiencing rapidly tightening supply, and open interest is shrinking as participants back away from leveraged exposure. He believes that if one spark, be it geopolitical tension, a financial event, or an unexpected delivery failure, triggers a wider confidence collapse, the suppression mechanisms could fail spectacularly. That would result in a dramatic repricing of both metals, with silver potentially seeing the largest percentage gain due to its historically undervalued status. Now, we present the clips from Andy's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
As far as gold is concerned, and as far as silver is concerned, I think that there's a high probability that what we've seen really, as far as I'm concerned, since June 12th, with gold down about $100 and silver down about $1, is not a reaction. It's a strategy. It's a strategy that is implemented in the form of a methodical decline, and that decline started Sunday night. It hasn't stopped. This is being done by the bullion banks, who want you to believe the narrative that it has to do with, the ceasefire and moving from, risk off back to risk on. This is price suppression, period. And I say that to you for the biggest reason is that tomorrow is option expiration on COMEX, and Friday pushes the front end month, July, silver contracts into delivery. So there's a lot at stake, the end of month, the expiration, and the July silver contracts which go off the board. You have the second largest short position by the banks in silver in the history of the COMEX market. So, in fact, I said this on a couple of podcasts that I expected there to be a pullback into the weekend as a result of this. My guess is Monday you would see things move the other direction, perhaps Tuesday, simply because you have this big deal happening on Monday. So with the end of the month contracts moving off the board and first day of notice for the July contract. But look, as far as what's happening, people I think are too reactionary. They think too much in the moment. The bigger picture was looking very positive for gold and silver long before this 12-day war that we've now seen in Israel and Iran. So, I think it's has less to do with geopolitical events and more to do with commercial bank positioning right now on COMEX, and they have to push it down right now because of this massive short position. If not, you're talking existential threat to the survival of some of these banks who have this massive short position. So I expect it to be short-lived and then resume its upward trajectory the way it had been going for the past several weeks now. I think they're doing it in gold already. They're beginning to mitigate in gold. It's like they're losing control. But they want you to believe that this is a safe haven unwind, that the only reason that they've gotten this high is because of the tensions in the Middle East. And they forget that it had been going that high long before this. But yeah, I think in general what you're witnessing is maybe the realization by some of these banks that being short and having to use this much ammunition to hold down the prices is silly. Since Trump was elected, Jared, there's been over almost 820 tons with a T of gold have stood for delivery, and almost 9,000 tons of silver. The surge of deliveries into COMEX warehouses is crazy, and this is long before we've seen any problems with what's happening here in the Middle East. So at some point, when we see such physical demand, not just on COMEX, but in the LBMA and all around the world, I think continuing to be naked short is very silly. So I would like to think that we're getting closer to that, because it seems like we've already crossed that line with gold, where they're really not trying to knock it down quite the same way that they did. Now people look at gold, what's it down today? Let me take a look. You look at gold today and it's down 45 bucks. It sounds like a lot, but it's, it's a 1.5%. That's nothing. It's just that as the prices go higher, percentages seem bigger for sure. But yeah, I think that ultimately all manipulations end poorly, and I think this one will be no different as far as I'm concerned. So stay the course. The physical demand is overwhelming. The ability of these banks to easily suppress the price to the point where they have to have the second largest concentrated short position by the commercial banks in the history of the exchange for the July delivery. That tells you that we're getting, I think, to an environment where being naked short like this is really probably not worth the setup probably isn't worth the return when you talk about potential fallout. Silver, on the other hand, across the board represents, in my opinion, value of a generation. When I think of silver, I think of the word asymmetrical, lowest downside, highest upside. But with all of this said, the only people that are taking advantage of that are the most sophisticated, well-informed traders in the world. And why I say sophisticated is because the amount of deliveries coming off of COMEX is record-breaking. It's groundbreaking. And it's not an easy thing to do. These are people that are very connected, they're very smart, and when they're pulling off as much metal off of the exchange as they've been doing, where are they moving it to? And who's taking possession of it? And these are things that I think people need to think about. Who's got the ability to stand for delivery to that degree in gold and silver, silver in particular? The public, I think, Jared, is missing this largely, but those that have been buying have been focusing on silver or platinum. The thing to keep in mind more than anything right now is that they're panicking, they being the banks. They're trading over 350 million ounces of paper daily to suppress the price, Jared. And last I looked, somewhere around 960 million ounce short interest. You want to talk about the potential for a short squeeze? That's why you could have all but guaranteed the price was going to come down here leading into the end of the weekend because of the options expiration, the end of the quarter, where the LBMA and then the COMEX, these are important end of quarter numbers, and then of course the July contract rolls off the board on Monday, first day of delivery. And so all of these options, all of these derivatives, they're trying to keep the price down so that they finish out of the money. And then typically the way this works is that Monday afternoon, bang, it goes right back up.
Yeah.
This is just the same bullshit they've been doing for a long time. But one of these days they get caught with their pants down, the way that Bear Stearns did, which was largely why they went out of business, because they were on the wrong side of this. And so all we're really doing by playing this suppression game is playing right into the hands of the countries that are standing for delivery and the big players standing for delivery at subsidized prices. Eric Young, King Kong on Twitter, says that the Chinese are part of this now too, because they know exactly what we've been doing, and they're like, fine, we'll beat you at your own game. We'll play the paper price, we'll suppress the price, and then we'll stand for delivery as well at stupid subsidized prices. So I truly believe we're coming to the end of this game, and the desperation that they had to use here at the second largest concentrated short position ever on COMEX in silver is evidence of that. So yeah, it's a good time to be switching to silver, because all of these shenanigans that we're seeing and the shortness of availability is on the COMEX and the LBMA, where it's 8-week delivery delay. On LBMA, it's supposed to be 1 day. At some point, that has to spill over into the retail market. It hasn't happened yet, but it can happen very quickly with one spark, one event, one anything.
Many analysts now argue that global financial currents are accelerating toward a critical inflection point, one where US dollar dominance is steadily eroding. Mounting internal divisions in the United States, across political, social, and economic lines, are considered symptoms of a deeper systemic breakdown. At the same time, foreign powers are repositioning rapidly. The BRICS alliance is preparing to launch a cross-border payment infrastructure designed to include non-member nations, a move viewed as a direct challenge to the dollar's supremacy. Experts warn this shift is no longer a distant possibility, but an active transformation that could soon dominate global trade flows. Central banks, particularly outside the West, are increasing their holdings of gold and other tangible assets, signaling a move away from paper-backed systems and reinforcing the fragility of the current monetary order. Analysts also highlight how fiscal policies and economic narratives are being shaped more by illusion than integrity. With U.S. budget deficits spiraling and inflation metrics widely questioned, the foundations of monetary stability appear increasingly artificial. For instance, $90 billion in projected spending cuts amounts to less than 3 days of federal expenditures, barely a gesture in the face of trillion-dollar deficits. The global response has been quiet but strategic: reduced treasury holdings, rising gold demand, and the establishment of parallel financial frameworks. Andy believes the real threat lies not in a sudden collapse, but in a gradual, almost invisible withdrawal of confidence until one unforeseen spark brings systemic fragilities into full view. In such a scenario, the value of hard assets may be redefined overnight, benefiting those who recognize the shift early.
You're just seeing things accelerate in every single way. The way that the central banks have been accumulating, the way that they've been standing for delivery, it just feels like things are getting far more tense and tight everywhere, even in terms of this country, that something needs to break. This divisiveness that we see, where there's no common narrative any longer. Like we look at federal employees that are wasting and stealing taxpayer dollars as somehow a threat to democracy on one end, where President Obama deported over 5 million illegal immigrants and the left stayed silent, yet here you got Trump doing 20,000 convicted criminals and he's labeled a fascist. The double standards are staggering, and I think it's kind of like the end game where we're that far apart. So from a standpoint of unity in this country, of divisiveness, of something ripe for a change, people were talking not too long ago about a civil war. When you see all this stuff happening, the protests in these cities, and yes, I do feel like it's getting to that point where we're getting closer and closer and closer to some form of a reset, some form of, you see it politically, you see it socially, you see it morally, you see it economically. You're seeing it in the way that the world is breaking away from the dollar. You see it in the way that the world is accumulating commodities instead of, which is really the linchpin of the system in favor of treasuries. You're seeing so many things that are accelerating. When we talk about the BRICS in particular, it was Sergei Lavrov who came out and said that their new payment system, cross-border payment system, the bridge technology, would be offered to non-BRICS members. That's a massive deal. You have the BRICS meeting here in July. This is a very big deal. It's just a couple of weeks away. So yes, we are getting closer to that all-in moment. I don't know what the trigger is, but you can feel the tension in the air. So yeah, and I think it'll catch us all off guard. Normally, when you look back at these things, none of us see the pivot. We never would have dreamed that
True.
what happened in 2020 would have been something even on our radar screen. But you look around and you have highest levels of indebtedness, lowest level of savings. You have, just a setup that's ripe for change. And I don't know what it will be, but yes, I do feel we're getting much closer to that. And I think all of this stuff is not lost on the rest of the world, whether it be our political thing with Trump and being on the wrong side, whether it be the mismanagement of the world reserve currency, the fiscal and monetary irresponsibility, the divisiveness and divide in this country between left and right and blue and red and black and white and rich and poor and vaccine and no vaccine. And all of these things have just reached a boiling point. So it seems we're getting closer to that moment, certainly, maybe than ever before. And then you look at how the debt just keeps on accumulating. And at some point, the rest of the world is going to say, we just don't want to continue to hold dollars, to accumulate dollars for our goods and services. And worse yet, we certainly don't want to hold treasuries for the reserves in a country that's lost all fiscal responsibility, in fact, lost all fiscal sanity. And here we are with Doge, the $90 billion or whatever that they saved, that's 38 hours worth of spending by the U.S. government. It's next to nothing. And they want to raise the debt ceiling again. And $2.5 trillion in deficit spending again. We're not getting any better. The rubber is going to meet the road at some point. So I would look less for that all at once moment and deal with the fact that we're probably getting closer to that moment than ever before. Live in a world of probability where it can't stay this way. There's no reason that anyone would want to hold our treasuries in a currency that is being devalued as fast as this one is. And what is the negative outcome for the treasury market? Don't interest rates really have to go higher in order to entice people or to pay them fair value for a currency that is being inflated away? And that's one of the reasons why there's such an impetus to lie about the metrics in which we gauge inflation, the CPI, through the BS, the BLS, the Bureau of Labor Statistics, they lie, and whether it be through unemployment or through inflation, I think we all feel that inflation is much higher than they're telling us. But these are all the things that add to that moment. But yeah, I do think that the BRICS are a threat that people are underestimating right now, and what it would see. Everyone talked about the fact that they were too small of a group, even though they represented nearly half of the world population, 50% of global GDP, 3 of the 4 largest nuclear arsenals, all the commodities, the manufacturing, the rare earths. Everyone said, well, that it's just they can't compete with the dollar in terms of settlement. But when you open up this new bridge network to all of the non-BRICS nations, including the Belt Road, the Eurasian Economic Union, the Shanghai Cooperation Organization, and the BRICS, you're talking the majority of human population and all of the things that go along with it. So that is something that no one really thought of. And if that were to be, in fact, that is the stated goal of the meeting in Brazil, is to find alternative settlement and payment systems outside the dollar to reduce dependence on the dollar. Well, if you're opening it up to all non-BRICS nations and the alignment that they have with the Belt Road in particular, which is 75% of human population in and of itself, 50% of global GDP. Add that to the BRICS, the Belt Road, and all of these countries are closely aligned with China. It doesn't mean they're in the BRICS, but they're aligned. You get countries like Vietnam who have officially applied. You get Indonesia who has officially been admitted. These are countries that are resource rich and are, I think, breaking away slowly. So the slowness of it represents that this is a very big deal, and President Trump is certainly showing you don't want to be on the wrong side of the U.S. agenda. And so I think these countries are trying the best they can to align themselves in a way that allows them to break free, but not until all the I's are dotted and T's are checked. So when that all at once moment is, Jared, I have no idea, brother, but I do think it's coming to a degree that I think it would be nearly impossible to expect the dollar to retain its level of prestige and its level of accumulation and or just its place in the natural order of things as the world reserve. It is if you hold all of your assets in dollars, you're destined to go broke, period. And I think that's really where we're at this stage of the cycle. So yes, it's coming. When? I don't know.
The ongoing dislocation between physical silver availability and artificially managed paper pricing is setting the stage for a major market disruption. As inventories shrink and bullion delivery delays stretch across key exchanges, underlying demand continues to intensify, particularly from sovereign buyers accumulating reserves outside traditional channels. This tightening grip on available supply, coupled with retreating open interest, points to mounting pressure on the synthetic price structure. If a single stress point, whether geopolitical, financial, or logistical, pushes the system beyond its limits, silver could break free from years of price suppression. In that scenario, a rapid and substantial revaluation becomes likely, with silver poised to outperform as markets shift toward assets backed by tangible value. What happens if physical silver runs out before the paper market adjusts? Share your thoughts in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.